Hello guys, I'm just trying to see if things is working right now. Hello guys, I see that there are like 5 watching right now. So are you watching? I just try to make sure that everything is okay. I have the live streaming going good, as I can see. So I need to see. Okay. For watching. Hello guys. So are you there are 9 watching, so it's a bit clumsy here. I see that the title is not what I have put. It is how swing trading works live stream. Okay, so are you listening good? Are you listening? Are you listening? I see that there are 9. It says good streaming from Andrew. Hey Andrew, how are you? We have Mark, and this is the guys that they write to me. Okay, if yes, listening. Okay, that's very good. So the subject of today is how swing trading works. So in this session we'll try to explain into details what is swing trading and how it works and what are the steps that you should follow in order to do swing trading. Okay, so before we go to swing trading, I try just to give you the difference between the 3 basic styles of trading and investing that most of the people in the world use. Okay, there is what we call day trading. Day trading is when you buy a stock and you sell it in the same day. You don't hold at night. Okay, this is what we call day trading. And the techniques used by day trading is totally different from the other styles of trading. Okay, so make sure you understand that each style of trading has its own characteristics, and you should know all about it before you do it, or when you do it you will discover later that it is good for you or no. Okay, this is what you call day trading. Day trading, you should use a volume, you should use mostly news. Okay, news, whatever happens in the market, you should be aware of, and you should prepare your trading in the morning. Okay, you wake up in the morning early, and you should have the whole day free. So in order to do day trading, you should have at least the morning free. Let's say you have a second, you work a second shift, or you work third shift. That's okay. You can do it in the morning, because most of the actions happen in the morning, from 9:30 to 12. This is the most important time where you should be there. Here I'm speaking about stocks. I'm not speaking about forex or futures. Okay, don't be mistaken, because the other, they have a longer time than stocks. Stocks, they have just little time, from 9:30 to 4 o'clock. Okay. Now, this is about day trading. Now, what is the next style is called swing trading. Why we say swing? Because the trader is following trends. That's why he swings. The stock swings up and down, so you should do the same. If there is a trend up, you follow it. If there is a trend down, you follow. This is what we call swing trading. And you should hold the stock for many days, many weeks, or many months. It depends. Okay? It depends. There is another one which is longer, which is called position trading, which is like swing trading, but the people, they stay long. They stay like 6 months or 8 months until 1 year. It means they want to see the whole end of the trend. And this, they have big positions, and they do mostly like investors. It means they stay long. Swing traders, we don't stay that long. Okay, we don't stay that long. We can stay many days, many weeks, or 1 month, or 2 or 3, depending on the trend itself. Okay. Now, the next thing is what we call investing. Investing is when you want to hold a stock for more than 1 year. Okay, more than 1 year. This is called investing, and you should know about the company you are investing in. So it's different from day trading and swing trading. Day trading and swing trading, if you don't know the company, you don't know what it does, it's not important at all. What is important is you should follow the trend, or you should follow the price action. Okay, this is what we call trading. Investing, we don't follow the price action, but we follow the company itself. If it becomes bigger and bigger and bigger, you think that this company is good, and it can, let's say it is just a small company, and the stock is $10, and you know that it is a small, you see the capitalization. Capitalization, what does it mean? It means just you multiply the shares outstanding that it has and multiply by the price of the stock. This is what you call capitalization. Okay, bigger companies, they can have $200 billion or $400 billion, and small companies, you can find, for example, 500 million, 500 million, or 1 billion. These are called small companies. Okay. Now, as I told you, this is the 3 main trading styles. We have 2 that are trading and 1 which is investing, and they are totally different. Don't mix techniques and try to take any techniques from here and there and try to mix techniques. And this is mostly what happened to beginners. When they begin, they don't know what they are doing. Are they doing swing trading? Are they doing day trading? Are they doing investing? This idea of trading and investing is not clear in their heads. So today I want to make sure, since you are with me and I will answer questions, I will try to make sure you understand the difference between them, and then we can go to swing trading. This is what I do, and we try to go into details and I explain more and more. Okay, so if you have questions, please, you are 11 watching. If you have question about day trading or swing trading or investing, please ask me. I see the dashboard here. If you have any questions, just ask, and I can just see the questions and answer. Okay, let me drink some coffee before you ask questions. If for example you don't have any question regarding this and we want just to go into the swing trading, let's just say something about beginners. When you are beginner, you want information, you want how to trade, how to do day trading, how to do swing trading, how to do investing, but all is mixed up. You go online, there are some people online who don't specify their technique, where it goes to. Is it day technique, day trading technique? Hello, alive, Rafael. Oh, how are you? Okay, we are just at the beginning. Don't be fooled. We just begin. So some beginners, when they begin trading, they read books, they go to forums, they go to chat rooms, they go to websites, and they begin just read about how to trade. They go on YouTube and find hundreds or thousands of videos speaking about how to do day trading, what are the things that you should do. But you find that most of the people, all the techniques are mixed up. Okay, and some they take a technique of investing and they put it in day trading, or day trading to investing, and so on. This creates confusion for the beginner, and he doesn't know which technique goes with which trading style. Okay, so as I told you before, day trading basically tries to see if there is news, because the news is very, very important daily, and when the traders respond to this news, there will be a big fluctuation of price. Okay, a stock that it is, for example, $10, and there is a big earning news in the day, for example, 9:30 or 10 o'clock or 11, and the news comes and you see that the stock soars and goes up so quickly because all the people want to be in at the beginning. This is why the news, you should have the news with the first. You shouldn't just wait 1 hour or two, because all this will not be good for you. So day trading, you should be very active, you should be able to take decisions very quickly. Okay, so all the things, it should be set up, all your plans. You use a stock screener, for example, to check for any news or any thing that related to the stocks. If you are following, for example, stocks during the day, so you should put them in the list and you should follow them. Okay, whenever some news comes, you will be ready to take action, to buy or to sell short or to do whatever, depending on this situation. Okay, so thank you, Rafael, thank you. So this is about day trading. you should have also money. Okay, I know some people, they have 1,000, 2,000, 5,000. Some they have a lot, but understand that you should have some money, because when you do trade a lot, you will be losing a lot of money from commissions, and this is a big problem. Okay, this is a big problem for you guys who have small accounts. So if you are doing day trading, you should not trade that much. That's why for me, I don't do day trading. Okay, now we go to investing right now, and we leave swing trading for later. Investing, you should know about the company. You shouldn't just buy a stock because you go to a website, or there is a subscription or a membership to the website, and they ask you, according to our opinion, this is the best company to buy this year. Do you believe that? Now, these people, when they give you these companies, okay, that means most of the time there's two things. Either they do the research and they see that these companies, they do a neutral research. It means they are not paid by other people, because I understand in the market you will never know who is paid and who is not paid by other companies. For example, a company can advertise for its stock, and it is legitimate. Okay, legitimate. A company, it wants that all the people of the world hear about the company, about the name of the company, about the brand name, about its products. For example, if I tell you, for example, Apple, okay, what's the idea that you have? All in the world we know Apple. We know Samsung from Korea. We know Walmart. We know other companies that are very big because they advertise a lot. Okay, it's not just these companies are sleeping and then you will hear about them. No, they do a lot of advertisement. Now, how? By paying people to speak about these companies. That's why you, when you want to buy a stock, a company for investing, you shouldn't rely mainly on this kind of recommendation. You should do your own work. You should have some criteria. You can read books. You can do whatever, and do the search and find the stocks by yourself. You don't need a lot of stocks, okay, in investing. You try to diversify. Don't put the same. For example, let's say you want retail. Let's say you take a company from retail. Okay, you should go to, for example, drugs companies, and you take another one. You should go to banks and you take another one. You should go to any other things. It means you should diversify, and don't put all your stocks from the main sector or the main industry, because if the industry falls down, okay, then you will have a problem. It means all your account will be down. So don't do that. This is just what we call diversification. You can go online or you read books about investing, and they explain more and more and more. For me, I'm just giving you general ideas about investing. Okay? Now, how to invest for the long run, or how to do it? You just Google it. You will find many ways. It's like a 401k. You just put money, and this is the best thing. Just put money in your account and buy and leave, because the market goes up, goes down, and you will have, at the end, you will have a decent percentage. Okay. Hello, Clav. How are you? So we are just beginning this session, the live session, and it speaks about how swing trading works. Where we have seen day trading just in a few minutes, and then we see investing in a few minutes. And right now we can go to swing trading, and we try to explain how it works. Okay. Okay. Now, swing trading follows trends. You find some stocks that are doing nothing, and for me, I call them, I say they are sleeping. Sleeping, they do nothing, which means they go a few cents a day, 10 cents or 20 cents, $1. They go down, they go up, they go down, and you find them trending for a long time. It could be even 3 months, it could be 6 months, it could be 1 year, and this stock is sleeping. Now, and then one day, these stocks wakes up. Now, when they wakes up, they do what we call a warming up. It means they begin to go up and down, but with volatility. It means the stock will move, will begin to move. Now, here is what we call our momentum. Here where we should search for stocks. If we find like this kind of stocks, we try to buy them according to my criteria from the stock screener, which is training level 2, how to search for stocks using stock screener. And when we find these stocks, we try just to select 1 or 2 or 3. Okay. Now, before you begin, why to search? You should search when you need stocks only. Okay, so I see you shouldn't search stocks when you don't have money to buy. This is very, very important for you, so don't waste your time. For me, for example, I don't care and I don't go to stock screener. I go to it when I need to replace a stock or 2 or 3 if the stocks are sold, or I exit by stop loss, or I exit by myself. I want to take all my profit at one time and I exit. At that time, I need to replace this kind of stocks. At that time, I need to search, because I shouldn't leave it for tomorrow or the other day or the other day. I don't want my money to stay not working for me. And this is the basic of swing trading, and this is what I teach, because I don't know what other people do. But for me, my money is working for me 100%. I don't leave money out of the stocks in my account just like that, without being in a stock. I will never do that. Can we search and buy after market hours, or you advise against that? No, Raphael, when you search after the market close, you can't buy the stocks. So why you search? Okay, Raphael, you should understand this. You can buy in the morning, but in the morning you will never know what is the price look like. If the price doesn't go that much, it's okay. But for us, I haven't, Raphael, you just ask the question before I explain. I will just go ahead and just go and explain the steps. Okay, as I told you, you don't search if you don't need stocks. Don't do that, because you just waste your time. Okay, you go to search and you find stocks, and then what? You don't have money. Why you search? So keep things simple. Okay, keep things simple. Let's say you have $5,000. You bought a stock with $2,500. You bought one stock, and you leave $2,500 to buy another stock. Yes, at that time, you can just go ahead and begin to search. And try not to search 200 stocks at the same time. As I showed you in my subscription, you should minimize the stocks that you see by sector or by price. You should see just, for example, you have 20 or 25 stocks and then put them in the chart and then begin selecting one of the best of these stocks. If you don't find, go to another 20 stocks and do the same. Okay? Now, when do you begin to search? In my own strategy, in order to find a good signal, you should search at the end of the day around 2:30 or 3 o'clock. Now I ask you, I will explain why. Because in the morning you can find some good stocks, but at the end of the day they go down and they become bad. If you buy in the morning, you find a signal, for example, but this signal will become weak or become bad, or there is no signal at the end of the day. That's why I told all my students never to search in the morning. We are not day traders. We are just swing traders. We should see a signal. And this signal, I have explained it in training level 2, how to search for stocks using stock screener, or training level 3, how to search for stocks using an industry index, and my subscription. All these three, they have the way to search with the criteria and the criteria of selection. All this is explained in this training. The subscription has all these 4 training levels. Okay, now at 3 o'clock, you go to stock screener. You need to buy, for example, one stock. If you want to need only one stock, why you search 200 stocks or 500 stocks? No, you search only few stocks. For example, let's say you understand in banks. You understand very well, or you are working in a bank, or you have a finance knowledge. You know banks a lot, so this is good for you. You go to the bank sector, and you find banks that are good to buy today, and you buy only one bank shares, whatever shares you have, you want to buy according to your money. Okay, now this is what you do. You search. You can add another criteria. I have only two criteria that I always show, but you can add another criteria, which is sector. It means you choose which sector you want to buy the stock from. Drugs, banking, transportation, utilities, financial services, whatever sector you like. Or if you want just by price. For example, let's say you don't like big stocks. You like, for example, stocks and they're $10. You go to the stock screener and you find the price and you choose from the menu under 10. All the stocks that you find will be under $10. You take the stocks, put them in the chart, and then do the selection and check a chart by chart, and then select one or two that you want to buy. There is no need to go and put 100 stocks in your chart and you only need one stock or two. You are just wasting your time, okay? Because sometimes you will find a lot of good stocks and you can't buy them. You can't buy them because you don't have money. So why you waste your time? Kareem, do you do intraday buying and selling? Do you ever do screen capture? I would love to watch you in action. Oh, intraday buying. See, in my subscription, I do a live search on the stock screener, and I go to the chart and I show you live how I select stocks. But this I will do it on Friday, and you will see it on Sunday, because there is a process to upload the videos and processing, and on Sunday morning you can see my videos. This is a live. It means I do them live. But here is the thing. I don't want you to take the stocks as stock picks. This I am against. I will not give you stocks to buy, because it's as if I will be responsible for the stocks, and you are not responsible. If you buy a stock and it goes down, you say, oh Kareem, you told us to buy this, but it goes down. Okay, so you see the problem? So my way of doing business is that I teach you how to do the thing, and then I show you what to do. For example, in training level 5, how to make money from stocks, I give you the concept. And this concept of making money, this is what you should do. Because when you buy a stock, it doesn't mean that the stock will go up by force because of the strategy. It doesn't work like this. No one controls the market. No one tells you that tomorrow 100% the stocks will go up. No one. Because no one knows what will happen tomorrow. Okay, maybe all of us will die tomorrow, so how can you know? So no one knows the future. So don't predict things. We just use a signal, we buy, and then we see. How do you check for bid and ask? Finviz doesn't have a filter for bid and ask. If you can suggest any screen that has the bid. Oh, no. Live, Rafael, I will explain. Bid and ask has a relation with the volume. Try always to find stocks that have a high volume, 1 million, 2 million, 3 million, 5 million. And then, let's say you want to buy one stock, but you find 3 stocks. You should go to your broker and see the bid and ask, because Finviz or another stock screener, he has no right to give you the bid and ask, because he should be a broker, and stock screeners are not brokers. Do you understand that the bid and ask you should pay? Because you are some brokers, they give it for free bid and ask. Some other brokers you should pay for the bid and ask. That's why stock screener does not give you bid and ask. So bid and ask is very easy. Try to find high volume stocks. Okay, high volume, it means if the stock is big, it's $50 or $30, it should be like 500,000, 1 million. Okay, if the stock is very small, like penny stock, like $1, it should be millions. It should be millions to buy it. And then before you buy, you should check the bid and ask. Okay, so try to make sure that there is no stock screener that gives you the bid and ask. It's your broker. When you go to your broker, you check, and don't make it as a problem. It's not a problem. Just find stocks that have high volume, 1 million, 2 million, 3 million. Then you see them in the broker. You find them that they are good. Got you. Okay, thank you, Rafael. Thank you. What about dividend? Isn't it free money? What does it come from? Oh, okay. Hey, Chris Johnson. See, I will tell you a statement of Wall Street. If you understand this, you will understand everything. There is no free lunch in the market. There is no free lunch. The stock market is the most greediest place on earth. The people, they want to take, if they can't take your money, they can take it, but they can't, except when you do mistakes and they can take your money. So from where the dividend comes from? Okay, this I have a training. I'm just telling about the training. If you are interested to check it later, this training is called how to invest in dividend stocks. Now I will explain. A dividend is cut from the price itself. If you want to make sure, go to any stock and check the X date. The X date, okay, I will put it here for you, guy. Okay, the X date is where the dividend is cut from the price. Okay, for example, a stock is what is, let's say stock is $100. This is the stock, $100. There is a 5% dividend. The X date, you find a stock at $95. Okay, so this $5 or 5% of the stock that it is $100, from where it comes, it doesn't come from the company itself, from the earnings of the company. It comes from the stock itself, the capitalization of the company, but not from the earnings. That's why when you want to go to online and try to understand what is a dividend, they say online, in books, online, wherever you want to go, they say cash dividend is a dividend is a cash payment from the earnings of the company, which is not true. Okay, the company doesn't give you money from its own pockets. It gives you money from the stock itself. That's why you see that 100, tomorrow it becomes 95, and this money is taxed 5%. It is taxed, and there is a way I will explain this. Is that the government, they want to do tax on this money that it is in the stock market. Some people, they will never sell. Okay, some people, they will never sell their shares. They will never sell. Okay, it's their money. They are billionaires, they are millionaires. They add to their accounts, but so the government have this solution to take some money from them. So some companies, they give dividend from the stock itself, and this dividend is taxed. You get taxed 15% or whatever it is. Okay, so hope you understand that dividend is not a free cash from the company. It is from the stock itself. And if you want more, you can go to training level 14. I think training level 14, or let me check. I think it's 14 or 60. Just a minute. Let me check. No, it's not 14. It is 16. Okay, I will put the link for you, and you can check that. Okay, so this is the link to it for you guys, for the one who asked me about training level 16. Okay, about dividend. Okay, let's see what does he mean. You don't invest in penny stocks; they are trading vehicles. So the money that goes into my account doesn't come from the company. Yes, it doesn't come from your company. No, it comes from the stock itself. The company will never give you money for free. Okay, will never. The company will give you money for free if you work for this company. I will give you an example to understand this. If you work for a company that has a 401k, let's say you work in this company which is having a 401k, and you are contributing each month, each paycheck, some money. Now the company will match 100% or 50% or 25%, depending on the company. That money is a free money from the earnings of the company. From 401k, yes, it is. Even if you don't own the company stock, they will give you money from the earnings of the company. So have you understood now? The taxes on dividend in USA. The taxes, I think it's 15% tax, I guess. Okay, 15% I think for the tax for the dividend. If the bid and ask during market hours different than the bid and ask after hours or the same, so no. See, during the hours, trading hours from 9:30 to 4 o'clock, the activity of any stock is so good and is so high, so the stock is liquid. So the bid and the ask will be, in general, it's 1 cent between the bid and the ask spread. But after 4 o'clock, all the day traders, they don't want to trade. They don't want to trade because the day has ended, so they stop trading. Now, the market makers, in order to protect themselves, they try to make the bid and the ask wide. Okay? They make it wide in order to make more money from you. That's why it is not a good idea to buy or sell after the hours or before the hours if there is no if the bid and the ask is so bad. You shouldn't do that. Some stocks, some penny stocks, if you go to see after hours, you find 0. You can't buy and you can't sell. You get blocked. Okay? So understand that putting stop loss should be in during the day, not after the market close, because you can't. Sometimes you can't. You can't do because the bid and the ask is so wide. Okay. For a lot of companies, the spread are much wider when market hours. My own observation after market hours. No. It's almost all. I just Andrew, I just explained to you that after market hours or before market hours, there is no traders. There are few. So the market makers, what they do in order to protect themselves, because they buy and they sell for you and for the other guys, they match prices. If there are just few buyers, few sellers, they can't make the bid so tight. So they make the bid and ask wide. And they can make a lot of money from that. Okay, they make a lot of money, so it's their business. So you can't play with their business. So what I ask you, or what is my opinion, is that whenever you want to do something, do it during the day, either selling or buying, putting stop loss. Everything you should do it during the day. After the market close, things change. The day traders, they go home and they will never trade. So and you will have a problem selling or putting stop loss. Especially penny stocks, you can check them after the market hours. There is no that much thing. Now, okay, we have been like saying that only search for stocks when you need them. There is no need. For example, if you are just training like putting stocks into a chart and following them as a training, it's very good. Yes, you can do it every day. You can search for stocks. You can do. But when you are beginning to work for real, you don't need. It means you don't need. There is no need to do it. Just you waste your time. Why you do that? Almost all. Yes, Andrew. Almost are. As I told you, the companies, the traders, they leave. Okay, I understand. Yes, thank you very much, Andrew. Now let's continue. Just let me drink some coffee, and then I can continue. Okay. I say, for example, you have some money, and today you want to see the market if there are good stocks to buy. Okay? Now, let it until 2:30 or 3 o'clock, depending on how many stocks you buy. Because if you need a lot of work, you can begin earlier. Let's say 2:30. You go to a stock screener, you put my criteria, and then you select, for example, a sector. Or you don't select a sector, you go to the price, and let's say I want stocks under $10. It will generate a list. All this list are stocks that are under $10. You take this list and you put it in a chart, and then you begin to do my criteria in order to see what is the best chart that you can buy. Okay? There are some criteria you should learn. This, you will find this in training level 4, how to select stocks. If you have the subscription, you find this training included for free. You just go and see what is the best stock. Now, let's say you select 1 or 2 stocks. Okay? You go to your broker and you buy them. Buy them by limit order always. You just, let's say 200 shares, 500, 1000 shares, whatever is shares that you want to buy. Now, whenever you buy them, you buy, for example, one, let's say you buy the stock at $5.50. You go to the chart and you put a line, a green line, where you bought this stock at $5.50. You should put a line because this is where you buy. Now, after that, you should put the stop loss. The stop loss, I always say, it's a tricky matter. You should go to training level 6, how to calculate stop loss. You should study this. There are many models you should choose from. It depends on you, it depends on stocks. Stocks are so different. Each person is different. So understand that you should work 1 month or 2 or 3 or 4, always working on stop loss, what is the best thing for you. Okay? Now, same thing when the market is all closed at 10 p.m., for example. Now, what do you mean? Are you going to search at 10 p.m. at night for the next day? It means for tomorrow. You can do that. You can do at any time you like after the market close. You can. But the best thing is to do it when the market is working. It means in the trading day at 3 o'clock. The audio stream is still excellent, but the picture has frozen now. Okay, try not to check the picture because I try to fix this, but I can't. So in the future, I will try to do that. So don't worry about the picture. Because I'm not explaining things on the screen. I'm not explaining. I'm just explaining by sound. So don't worry about the picture because I can't fix it. And I see that the let's see the screen. Okay, I put screen. I don't know if the has the screen changed? Has the screen changed from my video to another thing? I don't know if things have changed, but it is not that it's not that important. Yes, the image has frozen. Oh, okay. There is no problem with that. So don't worry about this because I can't fix it right now since we are live. So let's frozen image Djellala. Oh, okay. So if you are listening to me, very good. No, YouTube is not receiving enough video to maintain enough streaming. As such, viewers will experience buffering. Yes, I understand that the video is not working that good, but since I am not explaining something on the screen, it doesn't matter. Okay, it doesn't matter. Now, so when you, I just wanted you to give a feedback. Oh, okay, that's good, Andrew. That's good. So the thing is, you should put, when you find it, when you buy a stock, you should do what? You should see the price, how much you bought the share, and you go to the screen, to the chart, and you put a line, a green line. Okay, I will arrange it here. Green line for the purchase price. This is just in the future. If you see the green line, you understand where you buy without going to your broker. This is why we use the chart. Yes, I know the picture is frozen. We are in Alaska, man. We are in Alaska? Yes. We are in Alaska, it's frozen. Frozen. So, when you buy a stock, go to your broker, see the price, and what you should do after you see the price, you put the price into a green line, and this is the purchase price from the chart. So the chart will be very good when you see it. It means you understand what is the purchase price. After that, what you should do, you should go and put a stop loss, and you put it in red line. This is how I do, and this is how I trade from since 2010. It's the same plan I do every day. Okay, the same plan. So stop loss is a red line. Okay, and with its price. Okay, you should put the line where the price will be. Okay, so now you have the purchase price where you bought the stock. You have the Hello guys, I just stopped the live stream and take it back. Hope it's good right now. If the sound would be frozen too, I would have logged out 20 minutes ago. Okay, yes, Andrew. Yes, if there is no sound, there is no need to stay. Yes, a picture is again, yes, because I stopped the software and I put it back. Here the video is working now. Okay, where is this guy who is called House of Minster? Where are you from? The video is working now. So the video is not that important, as I told you before. So what else when you put this what we call 3 lines? What you should do after you put 3 lines and you bought the stock, you put stop loss, what you should do, you close your account. It means you have done your job for the day. The job is done for the day, and all this should be done before the market close. Okay, before the market close. It means you should buy the stock, put the 3 lines that I told you, the purchase line, the resistance line, and the red and the stop loss line, and then what you should do, you close your account and just you have finished working. You don't need to do anything else. Okay? That's it for today. Now, what will you do after? So the next day at 3 p.m. Next day at 3 p.m. you can go and check what did happen in the stock market for your stock. Don't worry about the whole market, what did happen in the whole market, because you are not in the whole market. Okay? So you are not in the whole market, so try not to just waste your time looking at the whole market, the whole industries, the sectors, because this will never give you money. Things that will give you money is the stock that you are in. Yes, I know there is no video. Please try not to focus on the video, because the video doesn't work that good because of the live streaming. I know, so don't worry about the video. Okay, because I'm not explaining something on the video. I'm not explaining, so it is just my picture. So it could be any picture or something else. So, and the next day you log in and realize that your stock has gapped down 12% and your stop loss did not help because of the gap down. This could happen, don't you think? Yes, yes, it will happen. Now, for us, we will do the normal thing, and then I will give you the exceptions. You begin with the exception, okay? So let us speak about the normal things first. It is not that each day, each stock you buy, there is it gapped down and you lose 12% or 50% or 100%. Okay, it's not. So don't make the exception a rule, and this is very important to understand. What is smart beta? I don't use a lot of things, smart beta and the other stuff. I don't use that kind of things. So please don't try not to bring some stuff that we don't use. How do you find sector which is as hot as Google? Apple was late. Oh, okay. Incredible product asked about how do we find sector which is as hot. No, there is no what we call a sector that it is hot and there is cold sector. That we are searching for stocks. We don't care about sector. Okay? When you should think about the stock itself. Don't go ahead and look at the general broad market, because sometimes, let's say the Dow Jones is going up good for 1 week, but you buy a stock and you lose money. So what is the relation? There is no relation. So it is the stock that you bought which is very important to focus on. Don't focus on the general market. And you say hot sector and hot industry. These words are confusing because you read this online and they begin talking about we know that there are some stocks that are in hot sector. Okay? If it is a hot sector, all the people we know in the market. There is no what we call hot sector and cold sector. There is what we call, there is sometimes big moves, but the big moves you should know them at the beginning, not at the end. Okay? So on the next day you log in. Okay. How do you find sector as? Okay. Thank you for this hint. Thank you. Now, so Andrew, let's continue with the general thing, and then I go to the gap down. Okay. Let's say the stock goes up. So what you should do? You should leave at least the stock for a few days. Okay? And see, since you are right, that means that the stock can continue going up, and then you are in the beginning of the trend. And this is what is good for my strategy, is that You begin from the meat of the trend. It means at the beginning, not at the end, but at the beginning of the trend. And then you can continue and follow your stocks. There are many techniques to use on how to follow an uptrend. It means how to follow the stock. And this, you can find it in training level 7. Okay? To follow the stock, there are some techniques to know if the stock is still going up or the trend has ended, and the trend will be, there is a reverse and it's going down, and you lose all your profits. There are techniques that you can take profits at that time. Are penny marijuana stocks a good buy right now? Do you have any picks? Hey, Chris Johnson. When we buy stocks, we don't care if they are marijuana or there is medicine or there is banks or there is. We don't care. We care that the stock is going up and we make money. So don't focus on fundamentals. Fundamentals, what does it mean? It means you are looking what the company does. We don't care what the company does. Okay? So try to not to focus on the fundamental of the company or what is this company. Try to look on the stock if it goes up. This is where you make money. You don't make money from drugs or marijuana or whatever they pronounce it. You are not making money from that. You are making money from the stock if it moves up. So any stock can do that. Any stock. I'm telling you because I'm in the market since 2010. Any stock can give you money if there is a trend. It's going on. Okay. Hassan Berbera, I think in your strategy you often talk about sector industries. It's not that one of your courses focus on so. Yeah, no. This is the kind of search. I have two kind of searches. Almost, I have two kind of searches. There is one which I use a stock screener. Here I'm speaking to Hassan. At least Hassan Berbera. Okay. So this talk is for him and for the other people who are listening. So there are two kinds of searches that I use. Either you can use training level 2, how to search for stocks using stock screener. I use a stock screener. I put criteria. I generate stocks list, and then I put them in the chart, and I have another, and I begin to select by some criteria the best stock. There is yes, but there is number 2, which is called training level 3. Okay, this is how to search for stocks using an industry index, not sector. How to search for stocks using an industry index. It means this has a relation to what we call industry rotation. I will speak rotation. Yes. Now, what does it mean, industry rotation? It means some mutual fund, they focus on one industry or 2 or 3, and they buy a lot from this kind of industries in the same sector, because the sector has a lot of industries. Now, sometimes they buy some industries and they sell other industries, although they are in the same sector. But you find some industries are going up, some industries are going down. Now, my strategy, training level 3, how to search for stocks using an industry index, it will show you which industries are going up, which industries are bad, and you should avoid them. And then you can go to that industry, you go to the stocks, and you buy stocks from that good industry. Okay? And this is manual. Manual, it means you should put a list and you should follow the industries, and it is manual. If you want something easy, you can go to training level 2, how to search for stocks using stock screener. You generate the stocks without looking at the industries. Okay? But we are not talking about sectors. Sector is a very broad thing. Okay, we're not talking about that. What if I want to buy and hold rather than trade? What's the best way to go about doing that? Now, Chris, if you are going to do investing more than 1 year, this is called investing, you should know about the company you are investing in. Okay? You should, for example, search, depending on how much money you have, 2 or 3 or 5 stocks. You should know the companies. You should go to investing books or investing online, and you should study the company. Okay? This, you can check my training level 16, how to invest in dividend stocks. I will give you a lot of information about dividend stocks and tax and the other stuff if you are living in USA. Now, investing, you should bet for the long run, but it doesn't mean that when you buy a stock, a company, and you bet on it, and many years it will go up. Sometimes it go down and you lose a lot of money. So investing is betting on big. Either you have big money or you lose big money. This is investing. Now in swing trading, this is what I do and this is what I teach. It is not. It is either you make big money or you lose little money. Okay, this is swing trading. So I will write it here. Swing trading is to have big money profits and small losses. Okay, this is how it works. In swing trading, you buy today and you see tomorrow. If it goes up, you begin to make money right away. You don't wait 1 year or 2 or 3 in order to see if you get money. You can stay 10 years and then your stock does nothing. Okay? You can check, for example, Walmart. Check, for example, Walmart. If you invest in 10 years, you bought in 10 years, you will see that you have made no money, really no money at all. Okay? So it doesn't mean that you invest for 5 years or 10 years that you will make money as they say to you. No. It depends. It depends on the mutual fund what they buy. It's not the company itself. It has a relation, but it's not the company itself. It's what the mutual fund are buying. So let's burn the midnight oil. Okay, see what you want. Let's burn the midnight oil. Okay, if you have some oil, you burn it, it's okay. Swing trading, big money, Walmart 10 years. Same with Amazon, right away. You can check a lot of stocks. Okay, right away, I like that. But if you have bought Walmart in the 50s, I think in 1983, the stock Walmart was, I think, 95. Walmart was 95 cents in 83. It means 1983. So if you have bought it on that time, but right now it's a big difference. Is it true that Walmart in the USA has raised the minimum wage for the workers deliberately in 2015? I have read this yesterday. Now, this is fundamentals. This is what the companies do. The companies, they get a lot of pressure from the government, from the people, from the advertisement. Big companies, if you want to work for free, they will accept it. If you want to be a slave for them, they will accept it. So big companies, don't worry about them. Big companies, they want to bring immigrants from all over the world, and they give them $1 a day. This is what they want to do, if they let them to do. So minimum wage is just a game. So what is this minimum wage? If I can talk to you about this, can you live with $7.75, for example, an hourly rate? This is the minimum wage. So can you live with $7.75 an hour as a human being? If you give this to your dog, he or she can't live with $7.75. So this is just a game of the government, of the corporations, big corporations, and we are not going to do that because we are going to speak about swing trading. We are not speaking about problems in the USA. In the same way, can we do swing trading according to weekly charts? No. Hassan, try to understand. We use daily charts. We don't use weekly. We don't use monthly. We don't, because if you put weekly, you should wait 1 week in order to understand what's going on. Daily, it's better because when the day ends, you will understand what's going on in the market for that stock. So please don't change the time frame. Swing trading, I will put it, swing trading uses daily chart. It means day by day. Okay? Hourly rate. Okay, last year. Some have to be slaves, Karim. They are poor. No, it's see. It's the market. When we have a lot of people asking for work, the corporations, they know this and they try to lower the hourly rate because there is a big demand. But believe me, when there is no workers, for example, in the 80s, here in America, most of the companies begin with what we call $11 at a time. Okay? So $11 in the 80s. Why? Because there are a few people asking for work. So the corporations, they raise the hourly rate in order to attract people. Okay? Happy ones mean happy customers. Happy employees mean happy customers. No, man, they don't care about. See, this is just statements that it is in the market. There are some companies, they don't care. If you work for free, they will accept. If you volunteer to work for free and they get billions of dollars, they will accept. They don't care about anyone and how much you make. Who cares about you? You should care about yourself and search better opportunities in the market. It's not the job for the company to make you a better hourly rate or better salary. It is you that you should change these companies and go into the best companies that they pay good. Okay? If you go to a company that pays bad and you complain, it is your problem. It is you who make the problem. Why you don't change to other companies? Sorry, I want to learn something about your country. Oh, no. We are not speaking about other countries in the world. We are speaking about USA. And this is the thing about stock market. We are not going to speak about other people countries. We have a lot of people that are watching, and each one is from another country. So we just waste our time. If you don't like being paid the minimum wage, get a new job. Yes, Chris Johnson, you are right. You should choose, you should go to school, you should find a good training, you should search for better opportunities. That's it. A rising tide raises all ships. Swing on that, I care. Yes, that's a good thing. Hello, hey Pablo, you come late. So we have 1 hour 17 minutes. You should come early. Next time, Pablo. Andrew, it's true. Even if you are poor, you can trade. Yes, you can trade. Yes, but understand that you should raise money. You should raise, you should save money, you should do better jobs in order to have money, in order to trade. If you don't have money at all, you can't do business. This is for every business. It's really not nice. Yes. Take a loan from bank and then use margin account. No. The bank, if they know that you are going to use your money into stock market, they will not give you a loan, because they understand that it is risky and they can risk all their money. So it is you who is the, if you take your money or you make a loan and then you go to the stock market and you do business, it's your problem. But it is better to be your money. At least if you lose some of your money, it is your money. You are responsible for that. But to use margin account or the people's money or the broker's money, you are doing a risky thing. That's why, for me, my opinion is that when you are a beginner, just use your money and try until you become good at the trading. And then you can borrow money from margin account and you can do better trades. This is what all the people do. But at first you make a margin account and you borrow money and you don't know how to trade. You lose your money and you lose the people's money, and you will be in trouble, in debt. And this is what some people do, and it's not good. Okay, so as I told you before, what you should do in general, you should follow your stocks. Okay, there are some techniques that I explain in training level 7, how to follow an uptrend. You can just go there and try to apply these techniques in order to be better. Okay, now what if the stock goes down? Let's drink some coffee and then we speak again. Okay, let's say you buy stock today, tomorrow it goes down. If it reaches your stop loss, you will exit. So this trade is a loser. It is not you that you are a loser. It is the trade that it is a loser. Okay, you should make a big difference between these two things that I explained. Now, what if you have a gap down? It means you lose a lot, like the other guy said before, you lose 12% or 15% or whatever. Here there are some solutions. You should see the stock before you trade it if it has an earning dates. If you don't want to risk, don't buy too much. Don't buy many shares when you see that the stock is going through earning date. The people who do that, they like risk. If you like risk, you like too much risk, you can do that. If you are scared, don't trade stocks that are in earning dates. Okay, this is just an explanation. Which types of news that let stock up? Bassam. Hello, Bassam. The stocks can go up and down for earning dates. You can search this, is very easy. Earning dates, it means when the company wants to announce the quarter earnings compared to last year, they will announce it. When they announce it, traders, they come and they buy a lot. Sometimes the stock, we have a gap up. It means in the morning you find the stock has gone so good up. Sometimes when we have bad news, the stock will go down and we have a gap down and the people lose a lot of money. So you should be okay with the risk. How do I put in a stop loss? Stupid question. No, Love Light. Love Light, you should go and see training level 6. How to calculate stop loss. it is a tricky matter. It's not easy. You should learn. So I will give you, if you want to, in the future, you can go and you should go to this, and you should order the okay, either by a video, or this is videos, or you should go to my website and you choose ebooks if you want to. Okay, this is how it works. Okay, so Bassam, stop loss, it's not easy. If you go online and some people, they ask you, oh, you just put 1% or 2% or 5% or 10%, this is the stop loss, they don't know what they are talking about, because there are a lot of things you should consider before putting stop loss. Okay, so traders are not the same, stocks are not the same, and volatility of the stock, they are not the same. So you can't just go ahead and put 1% or 2% or 5%. This will never work in stock market, and that's why you will have a lot of trouble. So what you should do, you should take the training, apply it, and then when you have problem, you ask me, and we can go through real examples, and we try to find the best way to do the stop loss. Could this be a hint that someone knows that the earnings are good when an uptrend occurs before the earning dates? Oh no, see, you know, you want, this is what I understood from a question, Andrew Martin. You want a sure thing. I'm telling you, there is no way to know if the company has good news or bad news. There is no way, because the company doesn't announce. From what do you know? Okay, and this information, it's millions of dollars information. If someone knows, he can make millions or he can make billions if he is a big hedge fund, if he knows this information. That's why this is called insider information. You can't get this information. So don't worry, don't predict, don't find the people or gurus that they tell you that they have strategy to know if the stock will be having gap up or gap down. This is not true. They are big liars, because no one knows in the future what will happen. No one knows. So don't search. It is just you waste your time. You can search 10 years, 20 years, 30 years, and you want to have a sure thing, but there is no sure thing. I'm telling you, I have been trading since 2010, and I trade too much. I trade about 1,200 stocks each year. There is no such thing that you know in the future. If someone has a couple of $1,000s, if he know for sure he'll become a billionaire in 1 year, okay, he can, if he knows, but no one knows. That's the trick. I really recommend Karim's training. I only got 2, already got so much good information. Thank you very much, incredible product. You know, when some people, they begin to just get to know my strategies, and they begin to follow the strategies, the vision that they have will change. All the information that you have known before will vanish. Okay, and you will delete everything you know before, and you replace it with my strategy, because it shows you simple things, how things works. And if you can apply this simple works, you can make money in the future for sure, because you know what you are doing. If you are not following the instructions, you are not working that hard, you will fail with whatever strategy. So as I told you, if you have a gap down, first you should see the earning dates, when it will happen. It's very easy. You just go to Google or go to Yahoo, put earning dates for that stock. It will show you when the company will announce. So if you know the day, so if you want to buy, don't buy. If it is near and you are scared to death, you are scared to death to buy. But what if you don't buy and the stock has a gap up and a lot of people make a lot of money? You say to yourself, I should be there. But if you lose, you say, oh, I shouldn't buy this stock. So this is just complaining like this. So you should be okay with the risk. Okay? Because sometimes it happens in news, international news, like the pre-exit news last year, 24th of August 2016, when Great Britain left Europe. Okay, so you will never know what will happen in the market until you see the results. And I have made videos if you want to see that. 24th of August 2016, go to my channel. At that day you will find I make video, and after that I make videos and I ask people if they can buy. It will be a good thing to buy. God knows. Yes, God knows about the future. There is no one who knows. For example, my strategy works with signal. I find a signal, the stock has a good chart and the criteria is good. I buy and I wait. Tomorrow at 3 o'clock, it means at the end of the day, I will see. If the stock is going up, it means I am right and I should stay. That's swing trading. That's how it works. Oh, welcome, Love Light. Welcome. I'm trying just to explain how things works for swing trading. Now, there are a lot of people who ask, how long should I stay? You should stay until the trend ends. Okay? If the trend doesn't end, why you should exit? Some beginners, what they do, this is typical for beginners. When they buy stock today, tomorrow he will see $50 or $100. What does he do? He exits the trade and he is scared that the stock will go down. Okay? So this is not a good way to do swing trading. You should trade without fear. Trade without fear. If you are scared of the market, you will never be a trader. Okay? So you should just trade. Don't be afraid of anything. Whatever happens, happens. That's why you like risk. You like stock market. If you don't like risk, just go and find a job and work from 8 o'clock to 5 o'clock and you get your 8 hours, you have your money, and that's it. So why you come to stock market? Stock market is risky. So you should either risk to make money, or if you don't want to risk, go find a job. Always in the afternoon. Yes. Love Light, except when there is exception. When there is earning news after the market close. Let's say, for example, you buy a stock today and you know that after 4 o'clock the company will make announcement of the earning news. So you, in the morning before the market opens, you should check. If there is big money, you see a big gap up, you see money, you can sell in the morning before the market opens. You see the price, you see the bid and ask, you can sell with the limit order. Okay, I sometimes do. When I see a big money with when I say big money, understand depending on your money. Okay, so $100 is not big money. Okay, if you go work at any job, you can have $100. But for me, you should have at least some money, $500, $1,000, $2,000, $5,000 from this trade. This is some money that you can rely on, and you can get this profit for you. This is the only exception where I see my stock in the morning, when there is an earnings date, either before the market opens or when the market closes. Always in the late afternoon. Yes. trade without fear. So this is in general how swing trading works. So when you hold the stock for tomorrow, this is called swing trading. And when you follow the trends, and this is called swing trading. You follow stocks going up for a long time. Now, you will never know how many days, how many weeks, or how many months. You will never know. There is no rule for that. There is no rule. You say, oh, this kind of stocks go for 1 month or 6 months or 2 months or 5 days. It depends on the stocks. So you should follow, according to training level 7, how to follow an uptrend. You should follow stocks like this, and then if the stock is still giving money, you should stay. And then you change the stop loss wherever you want. If the stock goes down to that stop loss, you take your profit, almost all your profit, and you are happy with that. Okay? So there is no need to be scared of waiting for profits, because most of the beginners, they for example, you buy a good stock and then you exit early. You find $100 next day and you are happy. You have never seen $100 from a trade. Okay? You have never seen that. You see $100, you are so happy that you go just to your account and sell. After a few days, you will see that if you stayed, you will make $1,000. So I don't know if you will be crying or you will be just complaining that the stock market has done a trick to you. No, the market has nothing to do with you. It's you who is doing bad decisions. Yeah. Can a stop loss be changed on a rising stock? Yes. Yes, stop loss is just where you want to exit. If it is under the purchase price, this is called stop loss. Now, when you put it up, when the stock, for example, goes up from $10, it goes to 15 or 16, and then you put an exit, a stop. This is where you take your profits. It's not really called stop loss, but it is a stop from staying in the trade, and you take all the profits that you are entitled to according to your plan. Can a stop loss be changed? And yes, you can change stop loss as much as you can, and there is no fee for that. The only fee is when you buy and then when you sell. 2 transactions. So the broker will not charge you for changing stop loss or modify or whatever you want to do. Okay? Can a stop be changed without selling? Yes. Stop loss is just a price where you want to exit. You can change it at any time you like, but try to change it in the day. Don't change it after the market close, because you can't. The bid and the ask will be so wide that you can't. They will not let you. So you should do it during the day. Yes, this is possible. Yes. You can. There is also a technique that I use sometimes for following the stock. Sometimes when you see a lot of money accumulated, what should I do? I sell half of my shares. I got that half in my account, and then I continue with the half of shares that I have for continuing with the trend. This technique I use sometimes when you see I have accumulated a lot of money. Let's say you buy stock at $10, it go to $15 or $17 or $16. So you can buy 300 shares. You buy half of the shares, whatever shares you have. You buy half at 14 or 13 or 15, and you leave the half of the shares for the future. If the stock continue to go up, you will be making more with the other half of shares that you bought, and you have already taken some profits into your account. So I always do that when I see a lot of money accumulating into the stock. Okay, it could be, you will never know. Maybe you stay 2 weeks or 3 weeks or 4 weeks and you see a lot of money. So here is a technique. You can use it or you can't use it. It's your you are free. But for me, when I see a lot of money, let's say you buy 5,000 shares or 10,000 shares about a stock and it goes so good and you make a lot of money from this. So when you sell half, it's just you take some good money from the market and you put it in your account as profits, and this is a very good idea. I need to know how much minimum money I need to be in my account to be a daily trader. Bassam Muhammad, there is no limit. But what I ask you, Bassam, is the more money you have, the better you will be. Now, what is the problem of small accounts? Is commissions eat your profits and it eats your principal. Commissions. If you are doing each day a trade, how many trades you do a month? You do 20 trades, because the weekend the market is closed. So 5 days, 5 days, 5 days, 5 days, 20. If you multiply by the commissions, it will be a lot of money taken from your account by the broker. So this is so bad. So if you want to be a day trader, you should have more and more and more money each time. And if the small account is very small, you will have trouble. How to avoid selling too early, like selling Amazon last year, would have been a big mistake. Now, see, you should ask yourself: are you investing in Amazon or are you swing trading? Swing trading is to follow the uptrend. When it finishes, you should take your money. That's it. Okay? The trend has finished, because sometimes the stock goes for 1 week, 2 weeks, 1 month, 6 months, and then it's going down. So it's better to be out of when the trend has finished. Why you should stay more? But if you are investing for many years, you should not sell, because you are investing for many years. So this is up to you. Hey John Loss, how are you? Hey Kareem, good to see you doing the live stream. I'm still building my knowledge while I am adding funds to my brokerage account. Yes, thank you very much. John, thank you very much. This is the best way, is to add money to your account, and your account becomes bigger and bigger and bigger. In the future, when you want to buy, you will have the freedom to buy any stock that you like. You shouldn't be stopped from buying Amazon or buying Facebook or buying Google or buying whatever. You should have the opportunity to buy certain stocks like these. How much would you say needed to be invested to everyone? Is can you see notice what I am adding? So how much would you say average needed to be invested to average 100 per day? Okay, here is the deal. Here is the deal. I am speaking to Love Light. Trading stocks is not a job, so don't expect any money. Okay, don't expect any money. It's not a job. If you think that you go to work 1 hour and then you get paid for that tomorrow because the stock goes up, you are wrong. So you should change your mindset from now, that trading stocks is a business. You can have a lot of money in one day and you can lose money in the other day. So it's not each day you make money. This is not true for anybody. And if someone tells you that each day I make money, this is not true. This is a broker idea. When you are reading, for example, you are doing broker webinars, and some people who have no idea about trading, they will ask you, oh, okay, you should send the limit on how much you make each day. Who knows? How do you know that you will make on that day you make money? Who tells you that you will make money on that day? Maybe you buy stock and you lose money. So this is not a job thing. This is not a job thing. So so you should think trading stocks as a business, not as a job. You should differentiate between them. How much time take your strategy per day or per week? Can you explain briefly the routine we do each day or each week? No, I have been explaining the whole 1 hour and 43 minutes. Hassan, I have been explaining what you should do. I told you, if you need stocks at 3 o'clock, you should go to your stock screen and begin to search. You find one stock or two, you buy them, you put 3 lines, the purchase line with the green, resistance line with the blue, and stop loss with red. And then you should see next day at 3 o'clock what will happen. If the stock is good, you continue holding it for many days, and each day you should check at 3 o'clock. This is what you should do. But there are techniques to follow the stock. Okay, there are techniques, and you should learn my strategy in order to follow me, how I do all these steps. Okay. Yes, Andrew, as I explained, to make $100 a day easy, I would imagine you need about 70 to 100K if you are a beginner. Oh no. why you say $70,000 $100,000 to make $100? No, it's not true. It's not true. Because if you have big account, you can buy 4 or 5 or 6 stocks, and you can make hundreds of dollars each day. Okay, not just $100. You can make thousands of dollars, depending on where you are, depending on what you buy, depending on what you sell at the day, depending on your experience. Okay, but you can make a lot of money. It's not something that it is far away from you if you have money. Not every day, but I think average. I get never disappointed while expecting losses. Yes, losers and winners in the trade, it's something common. It will always happen. The main thing that you put in mind is that you should not lose too much in each trade, and you should make more in your good trades. Okay, so this is the main thing that you should put in mind. I get never disappointed when, yes, so you can't make a living unless you have $100,000 to play with. No, I don't say. Who said this? 100,000, 200,000. You should see, because when you begin to work on the stock market, you begin to see how much you make in 1 month or 1 year, and then you can decide if it is enough or no. So people are not the same. Some people doesn't need a lot of money. Some people needs a lot of money. Okay, so the bigger your account will be, the better you will be, because you will have freedom to buy whatever stocks. It has nothing to do with 100,000 or 1 million or 10,000. But understand, don't expect too much when you have little money and you are a beginner. Don't expect too much, and don't listen to the other people online that you have 1,000, 2,000. You become millionaire in 1 year or 2. It's not true, and it will never happen. Okay, so don't imagine dreams to come true. You should be realistic. Trading business is like any other business. You should have you should begin to raise a lot of money, to save a lot of money in the account, and to begin trading, to begin fixing your problems. Whenever you fix a problem, you will get more money as a profit. So you can't make a living. Play with a dog, not with money. No way you can't live on trading if you have less than one. I don't believe it. No, it depends. There are some people who are excellent at trading, they can change their account very quick, and some they can't make it. So it depends on the traders, depends how much money they have, depends on the big move in the market. Sometimes there are big moves. If you just get these big moves, you will have a lot of money. I am a frugal guy and save a lot. Yes, Andrew, this is a very good thing. Wherever you save money, you are making a good choice. Wherever you put your money, okay? It's a good choice. Saving money, because you will never know when you lose your job or you have some problems or emergency or something. You will have your money to assist you when you need them, and this is what we call emergency fund. Emergency fund. So this is the way most people work. So the more you have, the more money you have, the bigger account will be, the better you will be in the future. Okay? So this is just something that that all the people do, and it has nothing to do with how much money, but in general, the more you have, the more you will get. That's why I ask always that people should have a lot of money in their accounts. Saving is a good thing. Now the best saving, as they say, the best thing is 10%. If you can make more, you are excellent. Saving more than 10%, so you are excellent saver, and this will be good for you in the future. You need at least $10 million to make $10 million to make $25 a day. So $10 million is too much money. Okay, $10 million. If you make 1%, you will make $100,000. Okay, so this is not true. This is not true. Jerry, this is not true. So yeah, try to see some stocks. How do they move? Buy a stock and put a lot of numbers. For example, you buy a stock at $10, you put $10,000, $50,000, $100,000, $200,000. You put them in this $10,000, in this $10, and see how it moves, and see how much money you make from each capital. And you will see that sometimes stocks go quickly up, and you make a lot of money. That's why all the people are going to stock market, because there are a lot of money to be made if you know how to trade. If you don't know how to trade, you should use little money and just try to practice first. So you don't need a lot of money when you practice, but you need a lot of money when you are good at making money. Yes, Andrew, if you are making more than 10% as saving, you are excellent, because this is a very good thing you are doing, and you will see it in the future. After 5 years, 10 years, 20 years, you will see $100, $200, $500,000. You will see it in your account, wherever it is, stock market or saving or 401k, whatever it is. You will see that money, and it's a very good thing. So Bassam say, what is the margin? Now, margin account it's a kind of a broker account. There is two kinds. One, it is called cash. Cash is when you put only your money. Cash account. You don't ask the broker to give you money. If you choose margin account, the broker will double your money. Okay, double your money. Let's say you put it. Karim, do you like the books of Nicola? Darvis? Yes, I have. See, I have read a lot of books, not just this guy, Nicola Darvis, or I don't know. I have read. When I was a beginner, I want to understand how things work. I have read hundreds of books just to understand. This is the question that I have always at that time when I was a beginner. Why the stock goes up and goes down? This is my question. And until now, millions of people, when they are searching, they can't find an answer. That's why they lose money. Now, when you understand how the market works, then you can make the money, and because we have answered the question. So for books, I have read a lot. Maybe one day I have put a video called recommended books for trading and investing. Please try to check in my YouTube channel. You'll find that. Kareem, why don't you work for a big mutual fund? Yes, I will tell you the reason for that. It's everything is closed. They will never let you enter because it's a lot of money to be made without risk. Even brokers, if you want to enter to a broker, it is so hard. You should know someone to be working for them in order to get a lot of money, because a broker, just a broker, you can get, as a beginner, you can get $150,000 a year when you are just a beginner. So it is money. So no one will invite you to work with them, because they will do this, and their friends and their family thinks it's hidden jobs. This is what we call hidden jobs. There is a saying in America, if you are American, it is said, good jobs are never advertised. Have you heard about this statement? No, it's not because you have skills. They will not call you. They will ask their friend, or they ask their brother or sister or mother or father. It's hidden jobs. It's not as easy as you might think. Go and try it and you will see. It's not easy. That's why it is so hard to enter. Is a deep understanding of microeconomics required to be a successful investor? No. Martin Miner, this is for you. Understanding the economy, it has nothing to do with trading stocks. Now, if you can understand, trading stocks is a game of money. Is a game. If you understand the game, you can make the money. Okay? Okay? So it's like if you know how the game works, you can make money. But if you don't know how this works, you will never make it. Okay? You will never make it. So I've heard you can get a job at a hedge fund if you have an excellent track record trading your own money. No, it's not true. It's not true. It's not true about the track record. But some who have money, they can ask you to trade. To trade with their it means to trade with their money, okay? But they put rules on you, and sometimes these rules you can do, so you can object, okay? But this, as I told you, working with a hedge fund or working with the brokers, it is hidden jobs. As I told you before, if you can enter with any means because you have friend or you have something, You can do that. You will be okay because you will have a lot of money. And then when you have a lot of money, you can make a big account. But this doesn't mean that you become a trader, because brokers, they are not trading. Broker's job is to take commissions and fees. That's why they give you money in the margin account. If they know how to trade, why they give you money? Why they give you money for 1% or 2% or 3% if they can make 20% each year or 5 or 50%? Okay? So they can't. So understand the jobs. Please, you didn't answer completely about margin. Thank you. Okay, Bassam. Thank you, Bassam. Margin account is they double your money. For example, you have $5,000. The broker will give you $5,000. You have $10,000. If you use his money, if you buy, for example, $5,000, your money, you buy stocks, then you use his money, you should pay interest rate. And this interest rate, it should be in the broker website. They will give it to you. 2% or 5% or 6% of the money, it should go to the broker. That's it for margin account. So is it understood for the margin account? Bassam? If you know what you are doing, you should make $100 per day on a 5,000. No, you can make more than $100. You can make 300 or 500, 600, depending on the days. But don't focus on the day. Focus on the trend. It's not each trend the stock goes up each day. Sometimes it goes up 2 days, 3 days, 4 days, and then it goes down 1 day or 2 days or 3 days. So don't count the days. We are not looking for the days. We are looking for the trend. Okay? The trend can stay 2 weeks or 3 weeks, and then we can see our money. So we are not seeing how much we make in a day. So stop thinking about this idea of the day, because you are still thinking trading as a job. And I told you, stop thinking trading as a job. Trading is a business. In a day, you can make $1,000 from $5,000. You can. So it has nothing to do with days. It has to do with what happened in the market, in that stock. Oh, okay, very good. Thank you very much. Yes, avoid debt, because margin account, if you use margin account, you double your profits and you double your loss. So be careful when you are using margin account, because you are borrowing your money that it is not yours. If you lose, it is you that you lose. It's not the broker, because the broker, he needs all his money with interest rate. He doesn't care about you. You can make 500 by 1,000, but depend your expense. Yes. No, don't put a number. Okay. What if you buy a stock with $5,000 and next day we have a gap up? It goes 10%, 20%, 30%. You will make a lot of money. So this has nothing to do with daily profits. So stop thinking about daily profits. Think about the trade itself. You stay 2 weeks and you see how much you make. Sometimes you stay one month, sometimes 2 months, sometimes 2 days, sometimes 10 days. So the stocks are not the same. Now why? Because the trend is not the same. There is no a rule for a pattern that you should follow. Stocks are always doing foolish stuff according to the foolish traders they trade. Because understand, what makes the stock move is the mutual fund and the people who are trading. So some they buy for going long, some they short the stock, and so on. The interest on the margin account is only for overnight traders or longer, not for day traders. Yes, true. Andrew, yes. If you use margin account for the day, they will not charge you. They will not charge you interest rate. It's true. If you hold the stock overnight, they charge you the interest rate according to what they have. But daily is fast and more. Who tells you that the daily is fast and more safe? There is no safe thing in trading. There is no. When you put your money, it means you are risking your money. Yes, in day trading, you are not going to make a lot of money, and you are not going to lose a lot of money, because if you put stop loss, you exit early. But this is not good for someone who wants to follow the trend. That's why we don't do day trading. We do swing trading. We want a stock that go to a trend, goes from $10, it goes to $15, $17, $20. We want a lot of money, so we want to stay more in order to get more. We don't want to stay 10 minutes or 1 hour, 2 hours, and then the exit, because we will have to do a lot of commissions. No, there is nothing that it is safer. Forget about safe. For those who work Monday to Friday 9 to 5 are not able to search and buy at 3 o'clock, can they buy at night like 10 or midnight? But I know you said the bid and the ask is... Yes, you are... you can, for example, you can buy in the morning at 9:30. You can check, for example, with your... you can use your cell phone if you have an app, and you can see in the morning, you prepare your trade at night. In the morning, if the stock doesn't go that much up, so at 9:30 when the market opens, you can buy. This is an option. If you have a smartphone and you have the app for that broker, you can buy. You can just check the price. You have the prices on the paper, for example, or a notepad, and you want to buy a stock in the morning, 9:30, you can buy it. It's okay. How many positions can we follow or open for? Now in swing trading, you can have 2 or 3 or 5 stocks, but if you can follow them. Now if you are beginner, don't buy too many stocks, because you can't follow them. You should follow them each day. At 3 o'clock, you should see which goes up, which goes down. You should put stop loss. It will be a lot of work for you. So don't buy a lot. And another thing that you should know about is the commissions. If you buy 5 stocks and the commission is $5, 5 by 5 is $25 by buying. Then you spend $25 by selling. Here you lose $50. You lose $50 for commissions when you buy and you sell these 5 stocks. So try to take account of the commissions. So you should not buy and sell a lot. I like to trade in 2 hours and make money and leave early. Okay, if you are doing day trading, it's okay. In day trading, Bassam, you can check my training. Training level 12, how to day trade using the chart and candlesticks. Now I have I can send you the link. I have some techniques to use in that. If you are interested, you can just check what I offer. And you can here is the link, direct link. I just give it to you, and you can just check. Okay, this is training level 12, how to trade stocks using chart and candlestick. Of course, day traders can use margin, but they pay no interest. Yes, they pay no interest if you choose the margin account. And swing trading is easier to do for the part-time trader who works a full-time job. Yes. Swing trading is very good because you don't worry, you don't want to go to the screen and watch the stock minute by minute or 10 minutes, and you are just wasting your time. Swing trading is for all the people who have jobs. It's very good for them. You can even buy in the morning at 9:30 if you have an app for the broker, and you just buy. Of course, they traders can use margin, but they pay no interest. Yes. Which is very good. Now, as I told you, swing trading is good for people who have jobs and people who don't want to be stressed. Okay, if you like to trade without stress, you should use the swing trading. You buy stock and just leave it. If it's going up, you are sure you are making money. If it goes down, you exit with a stop loss and you forget about this stock. You should buy another stock. That is how swing trading works. So you shouldn't, if you don't put stop loss, this will be a big problem, and sometimes you have a big loss and you begin losing too much from your account, and you will never stay in trading for long. This is by experience. So you should always use stop loss to exit the trade. Yes. So we have done about 2 hours 8 minutes. So please, if you have questions about swing trading or something that we can speak about, we can just continue speaking about this swing trading. And we say we are following mutual funds. It means mutual funds, they have a lot of money, and when they begin buying stock, they can't buy it in one day because they want to buy a lot, and they can't show their hands. That's why they buy little by little. That's why you see the trend going up and up and up and up. When you see the stock is going down, what does it mean? It means there are some swing traders, they sell. Okay, so the mutual fund, they don't sell in a few days. He will keep at least 1 year. So when the stock is going up, make sure that you will be making money. That's why in the Wall Street statement they say the trend is your friend. So if the stock is going into an uptrend, you will be making money for sure. Okay? So there is no game with that. You will see it, and you will see some stocks moving like an uptrend. We have hundreds, thousands each year, they go like this. Okay? Hey Andrew, don't hate the player. I do not hate anyone until now. So this is the game. It's just a game of things going up, things going down. If things going down, you exit. You try to exit this kind of, you get rid of this kind of stocks because they are taking money from you. They are not giving you money from you. So you should be always thinking about your money. Are you making money? Yes or no? If you are losing your money, you should exit the trade. Why you should stay with the loser? Okay? Hated it almost self-destructive. How do you know how to follow the big players like mutual fund? Yes, John. This is my old strategy. How we follow stocks. This is the way. It means you find the signal. There is no other way to know. There is no fundamental or some news or someone in the market who will tell you. No one will tell you because it is an insider information. No one will tell you. But we know when the stock is going up. According to our strategy, when we do our strategy, we know that there is a mutual fund behind because we see the trend. He shows us his hands. What is he doing each day? So we will make money because of him, or because of many people or many mutual funds. Hey, not sure if you answered the question, please. Hey, Rafael, what question are you asking about? No. Warren Buffett, he doesn't buy stocks that go down. He buys billions of dollars, and he buys in a long time. So when the people are buying with him, okay, he will be making money, not just in 1 month or two, but in years, 1 year, 2 years, 3 years, and then when he see enough money, he will exit. He do like swing trading, but for a long time. But other mutual fund, they help him. It means they buy his company. He can advertise also. This is a hidden things. No one will tell you this because this is a hidden thing. They can advertise some mutual fund advertise for that stock, and people that will come and buy it, and the stock will go up and up and up and up. That's the market. For those who work Monday to Friday and are not available to search and buy at 3 o'clock, can they buy at night like 10 or midnight? But I know you said the bid and the ask is right. Okay, I have Raphael, alive Raphael. I have explained to you, you can buy in the morning at 9:30. You can't buy at night at 10 o'clock. You can't. You can buy in the morning or before the market opens. You see the bid and ask if it's good, you can buy. Or you can buy at 9:30. I say to you, you should use your, if the broker has an app, you use your smartphone and you see the price and you buy from there. This is what you should do. Okay? So this is the only way you do. Or before the market opens, if there are a lot of traders, the bid and asking will be good. But never, this is what I tell you, never buy with a market order in the morning without knowing the price. Never do that. Okay? You should see the price at 9:30. What is it, the price? And then you can buy. So you should need like a smartphone, and you should the app of your broker. You enter, let's say you are in your job and you have 5 minutes. You have everything in you because you searched at night and you know this stock is good. You see its price, and in the morning at 9:30 you see how much the price is. Then you buy with the market order. It means just the price. You see the price, you just buy it. That's it. That's the way you should do. We can't learn from Buffett. We don't have his money. Yes. Buffett, when he buys a part of the company. He doesn't buy 100 shares or 1,000 shares. He buys 10% to 20% of the whole company. He has a lot of money. Even in the 50s, when he wants to buy and to invest, he doesn't invest $1,000 or $2,000. He invests millions of dollars to buy parts of the companies when they are small. Okay? When the companies are small, now the companies are big. Okay? So it's so hard. So don't follow people who have money. You don't have money, so don't follow this person. I love Djellala. Yes, Djellala is my business name. My name is Kareem. Okay, my name is Kareem, and Djellala is just my business name. Thank you very much. Buffett was born on Wall Street. No, Warren Buffett. See, his father was a broker. He taught him all the things that he should know, and he works as a broker. He gets a lot of money at that time. That's why he can buy a lot when he was young. And in the 50s, it is the beginning of the big trend in the stock market. From the 50s to now, you can go to the Dow Jones and you can see how the market was so small. The Dow Jones were just $300 or $500. Now it is $18,000. You see how much he was in the right time, and he invests with the right money. You can't do like him. If you want to do like him now, you should have billions of dollars to do like him. So we can't. Sorry, Kareem. I know that Warren Buffett told his shares you can read it. Yes, you know, what happened in the past, it can be done today, except when you have billions of dollars and you can buy like him, or at least billions of dollars to buy. For example, if you buy at 2012 when Facebook began, it was 17.55. If you put millions of dollars, now you will be making a lot of money. Okay, so it happens like this. So it's so good when you have money. That's why I told you always save more money in order to be a good trader. Save more and more and more, and stop thinking just save a lot of money. uh, you can study his life. Warren Buffett is the biggest investor in the United States of America, but try to see his life. Warren Buffett, he was educated in money and he works in the money. His father was a broker. He was a broker. Understand, in the 50s, in order to buy a stock, maybe you should pay $300 just to buy, just for the commission. The commission was so expensive. So these guys, they make a lot of money at that time. That's why they invested in the stock market at the beginning. That's why they make their money. Okay? So, Kareem, what do you really like right now? Now, what does this mean, what I like right now? I search stocks, I buy, they go into a trend, I make money, and then I sell them. I don't have a stock to invest in or something. I always do swing trading because it's good for me. Okay, I just follow trends. I don't care about what will happen next year or the other year for a company. But if I have money, I would invest in a lot of stocks, but I don't have that much money to invest in stocks, because you should need money to make money, especially investing. So, man, when you know how to trade stocks, the main problem that faces you is that you don't have money. You don't have enough money to buy stocks that you see, and this is the problem. Now, when you are a beginner, you don't know how to trade, so you don't see opportunities as I see them. So when you take my strategy and you begin to see the stocks, you will understand that you need more money to make more money. Yes. In the past, commissions was so high, but now for us it is so good. Okay, it is so good. $4 or $5. The other, in the past, they can spend $300 or $500 just to buy, and $300 or $500 just to sell. So these people should have money in order to go to stock market. So it's not for the poor. I don't know about your tulips. So what is these tulips that are hot right now? For me, I see stocks daily that are hot. Okay, whenever they get to my screen and I find the signal, I just buy them. If they go up, I will be making money. That's what I do. I don't care about what's this. In the Netherlands, these tulips, I have no idea about tulips. Is it like a vegetable or what, these tulips? So no idea about this tulips. In the Netherlands, history is important. Yes, history, yes. You can learn from the mistakes of the people in the past. That's why we read books. So reading books give you ideas. It doesn't give you a direct strategy, okay? But it gives you ideas on how to make money, and they are right. They show you some ways. If you are good to understand and you make strategy from that, you can make money. That's a very good thing. Okay, so you are 18 guys watching me. Please, if you have questions, please ask questions about swing trading. Okay, we are now at 2 hours 22 minutes. So I want you to ask questions about swing trading or something that you don't understand. At least I can continue speaking about these subjects, and then we can end the session, and we will see next week, if God wills, we will see another subject to talk about. So if you have questions, in the 1700s there are a bunch of tulip sellers and no buyers. First marks clash. Yes, John, yes. If you have especially about about agriculture, about farmers, about, yes, you should have a market for things that you can sell. If there is no market, you make a lot of tulips and or onion or anything else, and then you can sell it and it will be damaged. Okay, so you should find a buyer to your product, whatever is the product. In the 1700s, yes, ETFs for beginners. Now understand, ETF, it is like a stock, but you pay a fee. You pay a fee when you buy them. Each year you pay, I think, less than 1%. So an ETF, it is called an exchange traded fund, ETF. So I will put this. They track indexes. Okay, they track an index. Any index that you know in the market, it has an ETF. It tracks it. If the index goes up, the ETF goes up. If the index goes down, the ETF goes down. It is for an index itself. For example, Dow Jones. If you want, for example, you to follow the Dow Jones, what you should do? Dow Jones is an index having 3 blue chips, biggest companies in America. If you want to track that index, what you should do? You should go and buy the ETF called Djellala. Okay, you buy it, and it is the index track. It's the ETF. Good for cheap towers. Yes. So this is the ETFs. If you are interested to buy ETFs, you can do that. Okay. You can, for example, follow gold and silver and precious metals with ETFs. For example, if you like gold, you can buy a gold ETF. If you like gold companies or mining companies, you can go to stocks that are mining, and then you can buy them. But understand that if you take my strategy, it means if you take the way I do, I search for stocks, you can find any stock that you like. Mining or gold or silver or real estate or banks or drugs companies, whatever companies you like. If you search, if you find that company, it means that if the stock goes up, you will be making money. And this is the good thing about my strategy. It means whenever you buy and you are right, you will be making money right away. It means the next day you will be seeing money. Okay? So it's not a big deal. A stock that it is $10, okay? You buy 100 shares. Let's say it is $10. Next day it is $11. You will make $100. Just 100 shares you bought. So these things of money is very easy when you are right. Yes, I understand, Jean Loss. I understand that the stock market began I think in the 16th century in Amsterdam with 2 stocks, 2 companies. It begins at that time, before America was America. Okay, when the Indians were living here in America and no European knows America. So this is the stock market began in Europe, in Amsterdam, with 2 stocks, I think in the 1500 something. And then this is the beginning of the stock market, and then it goes everywhere in the world. And now America is the biggest market in the world because a lot of money comes from all over the world. Karim, do you avoid companies for ethical reasons, like for example army industry? Army industry. Now, why you say arms industry is ethical reasons? It's not ethical reasons. Now, if you buy an arm from a company, you are defending yourself. So it is your right to defend yourself. Before they use swords, Now they use guns or they use whatever. So is, for example, defending yourself or buying a gun, do you think this is unethical? No, it is ethical, because you are defending yourself. If people, in the past or in countries, if a country has no arm, other countries, they conquer this country and they take their wealth. This is what happened in America. It happened in Africa. The people are naive, and they don't have weapons. That's why they had been colonized. So I don't see this. I don't see this ethical reasons. But each person has an opinion about some companies or so. So each one has his own reasons. Exactly, brother. Yes, brother. Good question. Call it defend industry, and you have no problem. Yes. See. I will tell you an example. Okay. Why the Indians, they have been killed and their country is taken by settlers, European settlers? Why? It's just because they can't defend themselves. They have just bows and arrows, and they can't defend themselves. That's why they are weak. So that's why their country is gone, and now they are put into reservations. So you see that? So this is why you should defend yourself. If someone attacks you in the street, and you should defend yourself with whatever means that you have. It's to be alive on this earth. If you don't defend yourself, they will kill you. They take your wealth. That's why it is so it is ethical to defend yourself. Mojtaba Rizuli, I am forex trader. Bye, John. I lock my doors. Yes, but even you lock your doors, they can open your doors and they can take your wealth. You know, it's locking your doors. It's not as safe as you might think. So the thieves, they know how to open doors. They can go from windows. They can dig under your house and enter from the underground, or they can dig your roof and they can enter from that. So you are not really safe in your house. So yes. Hey, Mujtaba Rasuli, we are not doing forex here. We are doing only stocks. So it's so different from what you do. Is there even an ethical question in the stock trade? Yes. For me, most of the time I don't do casinos and gambling websites. There are some kind of stocks that I don't like, so I don't buy. So I have enough choice in the stock market. So it's up to you what you want to buy, what you want to sell. It's all a stock. It's just a means to make money. It is not you buy the company itself. Okay? You aren't investing in the company. You are just buying to make money, and then you can sell. So don't put too much ethical thing, because if you put too much ethical things, you are, for example, an Indian, and you like cows, and you don't be killed. So you don't buy those companies that they kill animals like cows and like the other stuff. So it's up to you. So for religious matters, it's up to you. So you are free to buy whatever you want. No one obliges you. So whatever you want. I hear a baby. The next trader. I hear a baby. Yes. Do not invest in the euro industry until the euro index goes up. Now no, stocks, they don't follow always the index. So don't be mistaken. Although I have a training level 3 how to search for stocks using an industry index, you can choose that if you want to trade. But there are other ways, simpler way, which is a training level 2 how to search for stocks using stock screener, which is very easy to find stocks. Do not invest in, okay. gambling industry was very strong recently. Yes, it's as I told you, industries, they change. Now I'm telling you something. 2008 and 9 and 2009, when the financial, all the stock market crashed. But if you have bought gold and silver and the other stocks, I have made a lot of money in 2011, because there is a big move until April, when the market has reached the peak in these precious metals. I have made a lot of money because of that move, although the stock market was going down. So if you buy retail stocks, banks stocks, drugs stocks, you will lose a lot of money. But if you bought this sector, which is basic materials, you will make a lot of money. So it depends on where you are in the market. Okay, it depends. Yes, sometimes gambling stocks go up so good, resort stocks, whatever stocks. So for me, when I see opportunities in the market daily, I just buy and wait. If the stock goes up, I'm sure I'll be making money, regardless of the company. What does it do? I don't care what the company do. I'm not investing in this company. I'm not putting my money for many years and wait until the stock goes up for that company. I'm not doing that. I'm doing only to follow trends in the market, and then I make money. Few days, few weeks, or 1 month or two, I make my money. I sell the stock. I find another one, because the other stock will be going down, and it will be worthless. It will be not good. Okay. So whatever is the industry that you are looking for, you can choose whatever you want to buy. You have the total freedom. There is no one who tells you, no, don't buy this because they are unethical or ethical. It's you who decide what to buy, not someone else. Think positive and the money comes to you. Yes, think positive and try just to have a training, try to have a strategy, follow the steps, follow the instructions. Whenever you have question, you always have my email. Just send me an email. As always, I always provide my email in all my YouTube videos. Okay, or go and check my website, and you can see all the training in videos and in ebooks. And you see what I do as always. Lots of hype. Yes, it's for the people who have begun following my strategies. They begin to understand the big picture. They ask me questions, I will answer, and they follow them until they succeed. So I'm always with them. To lure in the retail investors, they have CX. I don't know what is this CX, but I don't follow anything else than my signal. I don't follow in indicators or moving averages. I don't care what the people use. So I use what I think is good for me. We want to learn swing trading. Kareem is a good man. Rare these days. Thank you very much, John. Thank you. You know, when the people begin to understand how the market works, you will get the general picture. When you get the general picture and how things works in the market, you will begin to see the money. Okay? Sometimes I see stocks that I know for sure they have a lot of potential of money. But the problem is that I have some stocks bought. I can't buy more because I don't have money to buy more. So this is the problem for me, is I need more and more and more money to buy more and more when the stocks are doing good. Thank you very much, Reed Mark. Thank you. Thank you. Yes, thank you. Thank you very much, Andrew, for attending this session. I know that some people are working on Sunday, but for me, I thought that there are a lot of people they don't work on the weekend, so I make my live session on the Saturday night. I know most of the time people are not working, but if people are working, you can watch it, watch all what you have seen, what I have said all in this session, and next time you watch it when you have time. Same to you, Andre. Don't work too hard, buddy. Yes, work smart. Don't push yourself until you collapse. And if the job doesn't give you money, good money, please try to find ways to find another job or to make another business. It's not worth it to stay with a bad job. It means they enslave you, and you are working so hard. They are making so much money, and they give so little. And this is too bad about corporations in America. Okay, mutual fund, they take fees. Why you are going to go to mutual funds? You can make your mutual fund by yourself. You buy, for example, 5 or 10 stocks that you like or you want to invest. You should know these stocks because it's an investment. And then you buy few shares, and you leave them for 1 year or two. This is a mutual fund. If the stock is doing bad, you replace it. If stock is doing good, you leave it. That's how mutual fund works. So you can do better than any mutual fund on the world. Okay? So you can create your mutual fund without buying mutual fund, because mutual funds, they take fees. If you buy mutual fund, they take 2%, 1%, or 3% from your money each year. If they are selling and doing some stuff, they take fees from your money. Okay? And you are going to do banks. You are going to the bank in order to do mutual funds. So I'm telling you, for me, I will never do mutual funds because there are a lot of fees. Why should I buy something and they take fees from my money? Okay, so it's too bad. So that's why I don't do mutual funds. Do you work or are you living from swing trading? Yes, I am working full-time trader and full-time business. This is my business. Okay, this is what I do. I don't do any job or anything. This is the business I do. I trade stocks in my account, and I do my business with teaching other people who need my strategies. Do you work or are you full-time trader? You have other jobs? No, I don't do jobs. I don't do jobs. This is my full-time job as a trader. But trading, it doesn't take time from me. For example, if at 3 o'clock I open my account at 3 o'clock, the stocks are doing good. So what is the thing I can do? I do nothing. Okay? This is the thing I do. So there is nothing to do. So I will be waiting next day at 3 o'clock if there is something happen to change a stock or to sell some shares or to do some stuff. This is what I do. So the time that I do nothing, I have to do my business. It means to teach others how to trade stocks, or I can do other things, leisure things or activities that I have time to do them. So I am free. I have a lot of free time to do whatever I want. This is mainly what I do. Thank you, Love Light. Thank you very much for attending this session. We will be ending this session soon. So I have 18 people are watching for me right now. So please, if you have any other kind of questions before we close our session, if you have more questions, please ask more questions if you have about swing trading. It's like 2 hours 42 right now, 42 minutes. So we will be ending this session soon. So I'll be just for those who want to watch the video again, you can watch it again and you can just listen what we have done all the questions I have answered. If there are other questions that I haven't answered, and you can send me a private message and I will why you trade stocks, not forex or futures. I don't like. Now forex is very volatile, and there are banks that are trading always big transactions. They go up, they go down. So I don't like forex things. So I like stocks because I like to own something. When you buy, for example, a share of a stock, you own something. Forex and futures and options, you don't own anything. You are just in the virtual thing about stock market. You don't own. So this is I don't like. I like to own things that I can buy a stock. If it stays 2 months, 3 months, 6 months, it's going up. Why should I sell it? So it's giving me money. But you can't do that with futures, with forex, with the other thing. You can't stay 2 months or 3 months or 6 months doing the thing. And most of the time, forex and futures and options, most of the people, they do it for day trading. Okay, they don't do it for swing trading for a long time. Okay, that's why I don't. No, incredible product. I don't buy mutual funds. As I explained to you, mutual funds, they have fees. If they take 3% of my money each year, why should I give them 3%? Why I don't buy a stock and then I don't pay nothing? And the stock goes quicker and higher than mutual fund. A mutual fund is the average of a lot of stocks. Okay? So there are bad stocks, there are good stocks, there are in mutual funds. So why should I bear to have bad stocks in my mutual fund? Okay? But the mutual fund manager, they keep all this stock the whole year, although they are users. That's why you see some mutual funds, they lose money. Some of them, they lose money. Some, they make money. But it's not that much. In a stock, you can make a lot of money, more than mutual fund. That's why I told you, I don't buy mutual fund, and I don't use my strategy in this kind of things. You can use it, but for me, I don't. Yes, thank you very much, John. Yes, we have been 2 hours and 45 minutes. It's nearly 3 hours, which is very good. I'm just waiting for some kind of questions, and then we can stop this session, and I will see you next week, like this time, if God wills. If we are still alive, we can continue our lessons and our live streaming. Thank you very much. So I think it's the end of this session. So if you have more questions, please ask me questions into my email if you have time. If you have more questions that we have not answered, you can just ask questions, and in each video in YouTube, you will find under it, you will find my website and my email. Just send me an email and I can answer you that. Okay, so thank you very much for watching, and I know that the video has some problem, but it's not that big problem because I'm not explaining something on the screen, so it's not a big deal. So thank you very much, and hope to see you next day. It's possible to make 300 in 1 year. Yes, it depends. It depends where you are. Okay, it depends where you are. Some, they can make 100%, 200, 300, depending on that year where they are in stocks. But not all the people will have the same percentage. Okay, it depends on where you are in stocks. It depends on how much money you have. The bigger, when you have a big account, you can't do that 300% or 500%. You can't. It will be too much to double your money or to make 300 or 400%. But when we have a small account, you can. Small accounts, because if you buy penny stocks, or you buy stocks that are so cheap, if you are a good trader, you can make a high percentage. Yes, you can. Thank you very much. And there is no sure thing in the market, so understand that. So don't think that each year you will make 100%. No, it doesn't. The stock market doesn't work like this. It's a business. Sometimes in a year you make a lot of money. Sometimes a year you make less money. It depends on the years. It depends when you are in the market. Okay? Sometimes the whole market is going up, but you buy a stock that it is a loser and you lose money. Okay? And you see the market is going up at that day, but you lose money. So it's where you are, which stocks you have, how much money you have, what is your level in trading. All this depend on your percentage, on how much money you can make. And always stop thinking like a job. A trading stocks is a business, it is not a job. So stop thinking that you can make $100 a day or $500 a day or a week or a month. The market is not a job that gives you money. The market is a business. If you are good, you can make money. If you are not good, you lose money. Thank you. See you next week. And thank you all you guys. And if you have all questions,